Shares in Royal Mail have risen in the first hour of their first full day of trading today. This is the first time people who bought shares through the government's website rather than a broker have been able to trade. David Jones is a market strategist and says while many will want to make a quick profit, there are reasons to hold on to those shares.
It's a nice windfall profit of about 40-45% in less than a week. But saying all that, for the longer term holder, there is a dividend of around 6% if you bought during the sell-off, and as we know, you get hardly anything for having cash on deposit. So even though we're seeing some people taking those windfall profits, I'm sure there's just as many happy to sit it out for a year, pick up the dividend and see how they perform long term.
So we know the value rose during the first hour of trading. What's happened since then? Phil Scott from Simple Investments in Godalming joining us now again. Hello, Phil.
Hi, Danny. How are you?
All right, Tal. What sort of morning's it been for people who have their hands on Royal Mail shares?
Well, the shares are currently at 480, and I think last time we spoke, I think it was Friday, wasn't it? They were 450, so these shares are, about 7% up, something like that, I think, over that period. And interesting to hear what your previous commentator said there, and I think he's probably hit the nail on the head. Whether or not you sell your shares today, and as you say, today's the first unconditional trading day for the shares, well, it probably comes down to your risk appetite and obviously what you think and where you believe this company could be in 6 months' time or in 2 years' time even. So everybody's got a slightly different way of playing things. I understand why some might hold on to them. The dividend payment promised is strong, and that'll be paid next summer. And if the company can continue to grow profits, it would in theory grow dividends. So there is a reasonable reason to hang on. Having said that, you might look at the valuation of the business now and look at the market capitalization at this level, capitalized at about 4.8 billion quid. And if you put that or look at that in the context of its profitability, you might argue that Royal Mail is starting to look pretty fully valued in its sector when you look at other players, say, trading in Europe. So it's going to come down to individual appetites and objectives.
So what you kind of did there, Phil, was answer my next question without knowing it. Would you buy or sell today? Because there's reasons for and against unloading them today, isn't there?
Yeah. Well, that's absolutely right. I mean, as I say, what you've got to do is take a view on whether this company can continue to transform itself as you move forward. They are undoubtedly going to be under pressure from now shareholders, of course, to grow profits, and this will probably mean job losses, or it could mean asset sales. For example, Royal Mail owns a lot of property in and around London, in around the city, and they're talking about this in the paper today as all part of the discussion, Danny, on whether this company's been floated too cheaply. Would you buy them now? I think you'd have to. If you got them at £3.30 in the issue, well, I think you'd be looking at it thinking, well, maybe we've got to think about taking a profit here. But the income yield is good, and a lot of investors with interest rates low in the bank would look at this dividend and go, well, I can get kind of 4%, 4% plus maybe if I buy this share. So there's no right or wrong answer to that, Danny. It's got to come down to the individual, but right now the profit's on the table for those who got involved at 3.30.
Which equates to about £300 plus, doesn't it? So you put your 750 on the table to start with, and you'll make over 1,000 today, won't you? And so you come away with 300 quid profit for just going online and filling in an online application, essentially.
That's exactly right. And of course, this then brings us into the discussion of, well, was this thing, if you're interested in the discussion is, have they sold this thing too cheaply?
What do you say?
I think the answer is probably yes. But then I'm reminded of other privatizations in the past, like when BT came on the market all those years ago. Well, I understand that thing as good as doubled in its first day or two as well. So on the one hand, you might say they floated it too cheaply, and I think we talked about this last week, and yes, the government is now out of 750 million quid or nearly £1 billion. Having said that, the goodwill that the IPO has generated, if you're selling your shares today, as we've been discussing, there is money there in consumers' pockets which could be spent in the economy, and therefore perhaps tax can be recuperated through people spending their proceeds of this. And of course, there is a feel-good factor here as well. So while some might say the government's messed up, on the other side, you could say, well, have they? They floated this business, they offered it out to many people, and people have made money. So this is debatable whether it's been successful or not. It will be very interesting to see where the Royal Mail is trading next summer. Of course, we could have some strikes coming in. That would logically perhaps impact the share price. We haven't had any risk there. at this stage. And the other thing I would say, Danny, is that you're not able to short sell these shares at the moment, as I understand it. That means a short sell is when somebody would speculate that the shares can fall, and you would make money by selling them here and buying them back lower in the event that the share was to fall. So short selling not yet allowed in the stock. That is undoubtedly helping the strength on the upside. That could change at some stage in the next week or two.
Okay, excellent to get your view on that. As always, Phil, thanks for now.
My pleasure. Cheers, Danny.
See you next time. Phil Scott from Simple Investments in Godalming.